Hi everyone, this is Rob Roy and welcome to the Elliott Elite US Market Update. Take a look at the charts. You can see that we are continuing to bounce off of this test that occurred back on April 2nd, test of the low. I'm referring to that low that occurred back in February. The main question is that the final test? Are we going to come back and test it again? Or is that it? Because it would suffice in the rules of testing lows that we've covered in previous recordings. So where do we go from here? Well, if we draw our lines connecting our lower highs, and now we have this new set of higher lows based on that recent test, you can see that we do have room to move higher just to finish forming out the triangle. Then we start all over again and say, where will the market break from there? I tend to think that this is a pretty viable scenario, especially considering this gap here that hasn't been filled yet. If the market were to continue to bounce up and reach this point of the triangle, then we would fill that gap. We'd be right in the point of the triangle, and then we'd be set for a potential breakout in the markets, one direction or the other. Again, triangles do not give you any sort of a heads up or viewpoint of which way things are going to break out. When you have a triangle, it can break either direction, which is why you need to trade those accordingly. Another sign is if we take a look at the SPY. As you know, we use that to bring volume into the mix, and look what's happened to volume. Volume has dried up a bit here, and so we are starting to get a little bit of below average volume, but certainly well lower than where we were just a couple weeks ago, where the volume in this consolidation was higher. Again, in the previous recordings, we talked about how higher volatility on volume marks both market tops and bottoms. So this could be a market bottom here off of this testing, and then the triangle being formed to see where we go from here. We also have the VIX, which is dropping back down. Remember, we view that 15 now becomes the support level. We'll see if that holds in this move lower, or excuse me, move higher, move lower in the VIX, but higher in the market. So if the 15 level holds, that would coincide with a little bit more to the upside to complete that triangle as well. So we're starting to see a few different factors all converge into the potential for a market bounce. Will it occur? We'll have to wait and see, but these things are starting to line up accordingly, and then we have lower volatility right at the point of the triangle. Perfect scenario to move higher. I do want to mention also that we have that bulls and bears survey that I refer to quite a bit, all the way down at 42 on the bulls, very, very low. In fact, when we got to the 60 plus level, that was extremely high on the bullish side. Well, if it drops down to 35 on the bulls, that's extremely low, which sets you up for a market bounce because people are too bearish at that point in time. Seems crazy that we would have gone in such a short period of time from being extremely bullish to extremely bearish, but the numbers are the numbers, and we follow along. Also wanted to show you a chart of the dollar, which just doesn't seem to want to do anything. It's continuing to base here. We do have a small, tiny triangle here, so we might get a little bit of a move, point or two move out of this dollar here, but not much more than that is forecast on the horizon. Interesting, again, that we aren't moving any further based on what's going on economically and with the rising of interest rates, but it could just be the geopolitical concerns are keeping the dollar at bay. We are starting to get a little bit of a bounce back up in interest rates, at least back into this area here where we consolidated for a couple months at the beginning of the year, and we broke through that level, but we're right back into that channel, as you can see, and then the 29 level would be resistance, as you know from our zigzag pattern. Again, go back and watch these previous recordings. I don't want to just do the same thing over and over again in these. I want to present new information. We are expecting a little bit further to the upside out of this, which would bring that 10-year into about the 3% range and coincide with that chart. I wanted to show you our case study that we presented last week on Chevron has broken out, and it's moving to the upside, and the call vertical debit spread that we put on here has generated over 100% gain at this point in time, so that's working out extremely well. And I wanted to bring a new a potential case study into the mix. I wanted to show you we do have, and this is again the powers of Profit Source and Integrated Investor. And if you're still watching this and haven't renewed your data yet to use this, I just fail to understand why. Because I created a custom search here. It's a directional search that I created myself that I could program into my Integrated Investor, and then I can run the search off of fundamentally sound stocks. So if I'm looking for stocks that I'm expecting to move higher, especially when we have this period of higher volatility and a little more concerns with what's going on in the market, certainly I want to have a directional position based on fundamentally sound stocks. And look, it returned 1, ULTA. So let's take a look at that chart. So it's not like you've got 1,000 different charts to look through. And the last time we did this, we had that Google zigzag to the upside with the butterfly that returned nearly 200%. So we have the same situation again here. So can narrow down a list of over 3,000 optionable issues here in the U.S. market down to just a couple to choose from, and sometimes just one, especially in this market. And you can see that we have this zigzag pattern here. There's the A wave, the B correction, obviously, as you can see there. So we can label those A, the B wave correction, my 61.8% favored correction. So then let's take a look at where we could go from here, and you can see up to about 235 there would be the 100% fib extension. Doesn't have to stop there, but that's the satisfaction of the zigzag. Remember, you can have extended C waves at times, but we could place a butterfly in this 230-240 range, which would be a fairly tight butterfly, so it wouldn't be very expensive at all, and expect to hit the midpoint at 235. That could work out to be a very nice position. So we'll let you know how that plays out. But again, a 230-240 butterfly with the 100% level dead in between, and that's where we want to go, is in the midpoint of the butterfly. But with these out-of-the-money butterflies, which we'll be talking about more in future educational events, just moving in the direction that you want it to go works out extremely well. So I hope you've had a wonderful week, and we'll be back to talk to you again next week. Take care, everybody.